Want to use cryptocurrency to buy property? Some lenders are loosening their guidelines and allowing it. Hey everyone, Mortgage Nerd here. So I've brought this up before because the lender I use the most allows for us to use crypto. It's not a big deal. I did another video on using credit card points and miles rewards that you cash out. You can use that for a down payment. That's pretty cool. Cryptocurrency for some lenders is, a negative thing. For a lot of people out there, it's a negative thing. Even though it's gaining so much credibility and the value continues to go up, even though there's always crashes. Either way, what the point of this is one of my lenders, one that was like, no, nothing to do with crypto, they don't even want to see it, has now warmed up to it. So now they're allowing it. Let's look at some of the guidelines, some of what they're saying about how we can use cryptocurrency to purchase a property or to finance a property in general. So this is for conventional loans only. So effective immediately, cryptocurrency, it gives a bunch of examples, can be used for down payment, reserves, and or closing costs with proof of liquidation. That's the key. You're gonna have to liquidate it. You're gonna have to make it cash. You can't send Bitcoin to the title company, at least not yet. But you just convert your Bitcoin to cash and then you send it over to the title company. So here's some bullet points on what they want to see. So the two most recent cryptocurrency exchange statements documenting the history of those transactions, including when they were transferred over. I mean, this is normal. If you're selling Tesla stock, we have to see that in the exchange, in your E-Trade, your Fidelity, or whatever the account is. They want to see that there for the last 60 days, 2 months. Then they want to see it sold and they want to see it transferred to whatever account. It's the same with crypto. They're recognizing crypto as an asset. It's a property in the eyes of the IRS. They're recognizing it as an asset that can be used in the purchase of a property or refinance or as reserves. Even as reserves, you're gonna have to move it to cash, it looks like, from what they're saying here. Now, notice it's saying it needs to be from an exchange. So if you have it in a cold storage, in a wallet, that might be more difficult because, I don't know. I don't use the cold storage right now, but if you have a statement in the cold storage that shows it's been there or something, maybe an account history, and then you transfer it back to the exchange, and so maybe there's some ways to work with it in there. We'd have to talk to the underwriters directly. Let's go to the other bullet points. Satisfactory documentation evidencing the borrower is the crypto account holder. So KYC, know your client. Did you go through that with your exchanges? Do you have all your personal information in there? Is it under the name of an LLC? If that's the case, is the LLC owned 100% by you? So there's a lot of things that we need to look at. It can't be in someone else's name, in your kid's name, and now you're pulling it out because that's not your money, that's your kid's money. So these are things that you really want to observe. The funds that are liquidated from cryptocurrencies must be deposited into a U.S. financial institution account. That's what I said, into your bank account. Borrower must provide written explanation as the original source of the funds used to purchase cryptocurrency. Don't be surprised if they say, show when you purchased this crypto, where did that money come from? Sometimes we have to do that. When someone buys stocks or puts money somewhere, sometimes we've had to go all the way back and say, all right, look, he's got $60,000 that it was put in 2019 before crypto boomed. That $60,000 has become $300,000 or $600,000. So, we have to show, at least in this case, they're saying a letter of explanation. Sometimes we want to show those bank statements with that money coming out of your account into the crypto account. That's pretty much it. Again, it's really cool to see lenders that were saying no to anything crypto are now accepting it because it is an asset, it is property, it's going to be here for a long time. If you're not in it, maybe you should look into it. I'm not telling you what to do. I'm not providing financial advice. I'm a mortgage guy. My license is in mortgages. I'll give you a lot of fiduciary advice for mortgages. That's what I'm good at. But I like crypto too. I like stocks. Well, I like videos that are not going crazy on me. I like real estate. I like investing. I like being balanced. I like having money in different places. Anyone that puts all their eggs in one basket, you can lead to some trouble. When I did only reverse mortgages, no other mortgage, I had some tough times when reverse mortgages went down. Like last March in 2020 when all the mortgage market went crazy, the only thing around was refinancing conventional loans, really, and some VAs. And if I was only in reverse, I'd be in trouble. So always keep a good diversified plan. Either way, you can use crypto in your mortgages. You can use credit card points in your mortgages. Watch my videos to learn about both. Mortgage Nerd out. Thanks.